Hey, this is Awais with EminiPlayer.net, and this is a recap for Tuesday, August 21st. Looking over at our trade plan for the day, buyers had been in control in the overnight session, and we had initial resistance at 21.5 to 23.5, and ES was set to open above value near initial resistance, and we were looking for responsive sellers on first test of that zone. The plan also said that given the low volatility and the narrow ranges, even if we do break above initial resistance, the expectation was for the buying to shut off by the 26 to 28 resistance zone. Let's dive into this real quick. We opened pretty strong, 18 quarter to 21 opening range, but then this open test drive opening type kind of fizzles out a bit. As you can see, we pull back to the open and then break below it here and then break again over here. Now, when we reverse back up, this is a potential long setup, and I would just have a stop right below the opening range low. But in my opinion, it's an aggressive long because you have initial resistance right above it. So I was not looking for any longs off the open. The focus was really on the short side. And we get to initial resistance, we get a little bit of rotation, but if we look at the 1 minute, we can see that the NYSE tick is holding above zero, right? We test it over here, we get a bounce, and then we retest again, and this time we move higher, but it's on a negative tick divergence, right? We don't have as much upside momentum when we break above 1423.5. It's on a negative divergence. The S&P advanced decline was looking pretty good. But again, we pulled back to positive 100. Usually we don't get these kind of strong pullbacks on trend up days. But aside from all this, bigger picture, if you check Monday's recap and the notes for the overnight session, you'll see that the premise that we're working with this week and the next week is that we're not expecting a lot of upside or downside. We're expecting a range-bound market over the next week or two, and we're not expecting ES to really extend the range much higher or much lower. And since this was a range extension on the upside, I was looking for short positions, right? Short setups at initial resistance. And one of the points I want to highlight today, because I was tracking this stuff over here in the morning, is the importance of risk management and using a stop loss that's wide enough that your trade has enough room that you're not going to get stopped out prematurely, and then the trade goes your way. But the stop can't be so wide that it paralyzes you after you take that stop, right? Because if you shorted this and you were holding for initial support down at 1275 to 1475, and the gap fill and potentially testing the VPOC at 12, then you probably got stopped out on this trade. Either you took a break even or you took a stop loss, a little bit above 23.5. But the important part is that you can't let that stop out be such a big deal that you can't jump back into the trade. If you see that the conditions are still good and they still support our trade plan, you're still getting good trade location, then you want to be able to jump back in without hesitating. And if you use a stop loss that's too wide, or if you use a stop, if you add to your position, if you add to your losers, so if you have a lot of conviction in the trade. I mean, I had a lot of conviction in responsive sellers being active over here, and that's why I said 26 to 28 would cap the upside. Looking at the bigger picture, working with our idea of limited range extension, upside and downside, I had a lot of conviction in this trade. But that doesn't mean that I short this and then I add more here, and then because I'm not guaranteed that this is going to work, right? This could just continue higher, and then what do, right? Do I add again at 26? Do I add again at 28? And that's how people end up with much bigger losses than they originally plan on taking, right? Is by adding to losing trades, or just widening up their stops because they have so much conviction in any given trade idea. It's always good to have conviction in your trade plan and in the trade setup that you're taking, But at the same time, you have to be assessing what the market's doing, and you never want to take so much risk that when the opportunity presents itself again to put on the trade, you've been stopped out and now you're just paralyzed and you can't actually execute. So in this case, this was a stop out, but then you get a re-entry when ES pushes above here, starts rejecting the IB high. At this point, we've put in a 6-point IB range, which is in line with the type of ranges we've been seeing over the last week or so. So we put in the IB, we're rejecting the IB high, we come back, we start rejecting 23 half, we have a negative tick divergence. So even if you got stopped out, this is a place where you should be re-entering because the reward to risk is very good, right? I mean, you have the potential for a pullback to 1275 to 1475. So if you're shorting 23 half, you're looking at a potential 10-point trade based on the trade plan, based on the trade location that you're getting over here. There's potential to make 10 points, and you're risking maybe 2.5 points. And you've taken, let's say, one stop loss already. With the way that I trade, I would have already taken a stop loss, but then I'd be re-entering at this area over here and looking for those lower support zones to get hit. So let's look at the 5-minute. We can see that 23 half, we get failure, get this big push down. This basically confirms our trade idea of responsive sellers being active over here. And then if you miss this, then this would be a spot to get back in based on this decent sized bar down on the 5-minute. So this would be a setup to get in the trade. Obviously, it's not going to be the best trade location. That's why ideally you want to jump in at the resistance zone. You don't want to wait. But in the event that you missed it, then perhaps you reduce your position size a little bit to account for a wider stop, and you get in over here. This was our pre-market support zone. We got a little rotation here, rejection at the 24-hour midpoint. Just some responsive buying, pretty weak. We're holding below the IB low, which is a bearish indication, and then we move down to our initial support zone, which was key, and we get a weak buy response over here. The other thing the trade plan said is that if we break below 12, then that would be a caution flag for buyers, and you have to be cautious at the 09.5 support if 12 breaks. So we can see that we get rejection, broken support equals resistance up here and over here. We've broken below 12, and then the next push down, we don't really get any bounce on first test of 9.5. We actually break below it. We have 1407 half as the 100% range extension of the overnight, and then we've put in a pretty wide range on the day anyway. And given the low volatility environment we've been in, this is an area where you should definitely be covering your shorts or even looking on the long side. So let's take a look at the internals. We can see that we're around negative 200 when price is testing that 9.5 to 8 area. So the internals are not initiative on the downside, right? These are not negative 400 trend down day internals, and we're basically pulling back towards the low end of the breakout and the developing balance area. And our bigger picture idea in play is, again, that ES is going to create a new balance area. It's going to create a new range, limited extension to the upside, limited extension to the downside. So we had 9.5 as the low, so we're getting a little bit of extension to the downside to to 8. But again, I'd be looking for exiting all shorts over here, and then this is a potential bounce area into the close. So that worked out pretty well. Today was definitely, obviously, a bearish day, and I wasn't looking for longs off the open, even though everything was indicating that buyers were in control. But it's important to be able to read the market in real time and know or have a good idea of what the short-term price action is telling you, but at the same time execute based on your plan and execute based on knowing the context and the overall picture, right? So for me, even though I'm expecting upside over here, I'm not looking for longs. My focus is really on getting that best price, getting that best execution on the short side. A lot of times when traders are looking to trade in both direction, when you're scalping, that works out pretty well. But when you're trading the way I trade, or when you're looking for larger price swings intraday, it makes things a lot simpler if you focus on, one direction. If you have a trade idea and you have a plan and you focus on executing the best of your ability in that direction instead of trying to catch every little wiggle up and down. So in this case, even though I'm seeing that this is bullish price action, bullish opening type, bullish internals, um, the bigger idea is that we're not going to extend range to the upside, too much. 26 is going to cap it, and really the focus is on getting the best setup on the short side, which on the daily chart obviously worked out very well. Um, and that's really the benefit. That's how you can get these bigger trades in. If you're always looking for the micro 2-point, 3-point trades, where the most recent price action is the only thing that matters to you, then you're not going to be able to get these type of setups, because you'll be seeing longs when price gets here, right? You're not going to see it as a spot to maybe scale out of your short and still hold your position for the gap fill and the naked VPOC tag. You're going to be seeing this as, okay, well, exit short and then go long. But then, that doesn't really work out too well, unless that's your plan. If your plan is to just take 2 points at, every zone, that's perfectly fine. Then you execute that plan and you probably have a very high win rate. But if you're looking for some of these bigger moves intraday, then I think it's important to have a trade idea and really execute on that, and leave these small moves to the algo traders and the scalpers, professional scalpers on the floor, exchange members. All right, let's take a look at the profile chart. So we have an outside day. Can't really go overly bearish just yet, based on the idea that we're going to get limited rate extension up and down. So any pullbacks we get from here, I'll still be expecting responsive buyers at the support zones below, and I'm just expecting balance over the next week or so, not really looking for any directional breakouts just yet. I'll post some more comments in the notes for the overnight session. If you have any questions, you can contact me on Twitter, EminiPlayer, or just post a comment on the EminiPlayer.net website, and I'll get back to you there. All right, take care. Have a good evening.